been sitting up here talking because I hit the go live, but I didn't hit the go live twice. I ain't even gonna tell y'all that. I am not gonna tell y'all that. Hey man, good afternoon, good afternoon, good afternoon. Uh since we doing this live for everybody to see, it's not just the members. If this is your first time tuning in to Tim's Tidbit, allow me to say welcome. If it's not your first time tuning in to Tim's Tidbit, I still want to say welcome, unless you're an eraser liquor, and give you a nice hearty, well, thank you for always tuning in to Tim's Tidbit. If you don't know who I am, my name is Timothy Lee Rogers. I get on Al Gore's internet every single day, and I talk about the price action. That's enough for the introduction. Today, before we get into the weekend chart prep, since I've been off for a few days, I decided, hey, I'm going to make the weekend chart prep video live for everybody to see because I got a few things that I want to talk about. May take a long time, may not take a long time. And Monday through Friday, I'll be trying to keep it to like 30 minutes. So today, I'm just going to talk about the things I want to talk about. And I said, hey, let's invite everybody to come into the backyard and hang out with us before we get into the chart prep so I can say what I want to say. Now, first and foremost, I got my master plan book. This is my master plan book. My sweetie gave me this book back in 2018. 2018, she gave me this book. This was when I was supposed to be doing TLR, video and photography. She gave me this book in 2018. Right there. Right? So this is the master plan book. This is where I write down my ideas. This is where I used to write down my ideas. And then I started doing it more on the computer. But I say, you know what? I'm going to go back to writing down my ideas in the master plan like I used to. And so that's what I've been doing lately. Right? Right? So, and I was in here today laminating the front page. She was in here. She was like, who in here? I was putting tape on the front page so that I can see. If anybody want to see what the front page say, that's what the front page say. Pause it and go back and read it later if you can. Y'all probably can't understand my writing. All right. And y'all see the year. I've been doing the year for a long time. You see the year right there. But first and foremost, what I want to get out the way, I got some show notes written down in the master plan. All right. Shout out to new members. We got some new members. We got 3 new members. Shout out Antonio Tribble. Shout him out. Being a Kid, unique name. And Cynthia Bernard. Welcome, welcome, welcome. Y'all clap it up for the new members. Those are some people who decided to support the channel in a financial way by joining the membership. I appreciate y'all. I appreciate all the active and the past members. Right? We got some viewers that, they still tap in all the time and they're not in the membership no more. I appreciate you for supporting in a financial way. And I appreciate you for still pulling up and supporting just by showing up. Can't do it without you. I appreciate all of the members. Again, shout out to new members. Antonio Treadle, Being a Kid, and Cynthia Bernard. I appreciate it. Appreciate you. Now, Tim, what you want to run your mouth out about besides that big old pimple you got on the side of your face that's been hurting all weekend? And you tried to pop it, but it still ain't went nowhere. My plans. As you all know, or you probably don't know if you're relatively new to the channel, I've always been primarily a swing trader of the SPY. Spy lean is what we like to call around here, right? I said 2023, I was going to try my hand again at day trading, right? So, the other day, I was sitting down thinking this was one day, about 2 weeks ago, and I said, "See, baby, I went and washed my face, put lotion on, and you can still see it right there. That's actually the other side. This the side I washed my face and put the lotion on. That side wasn't even crusty. But anyway, it don't happen. That's why I get That's why the VA payment for it. It's just my skin. Uncle Sugar did something to my skin when I was in the army. And that's that. But anyway, stop getting distracted, Tim. So I was sitting down thinking. I was doing some soul searching, and I'm sharing this in the hopes that it might resonate with somebody tuning in right now. My internet says acting crazy, so hopefully I'm not losing y'all, but it's showing me internet acting crazy right now. If I'm good, somebody put a 1 in the chat if I'm still good, right? Where was I? 1 in the chat. My sweetie put a 1, so I'm good. Oh, I was saying I'm sharing this to hope that it resonate with somebody, and I didn't want to just keep it in house, and I don't want to drag out the daily lives, right? So I was sitting down doing some self-evaluation, some you know what I'm saying, just some like deep dive into my own emotional state. Just think about how I've been feeling on the lives while I've been, reading price and taking trades with the black spiders on the live. And I just took a deep, hard look at my own self over these last few days that I was off, right? Just took a honest look at Lil Timmy Rogers. And what I came up with is I think I'm a pretty good swing trader. Some would say I'm fantastic. Some would say I'm pretty good at reading the daily price action, right? Some would say I'm fantastic. But when I take an honest, hard look at myself, I still got a long way to go emotionally when it comes to day trading. So what am I going to do? I'm still going to do my daily live streams with the black spiders, right? But personally for Lil Timmy Rogers, right? I've written out a plan. I got my plan written down for what I want to do. I ain't gonna go through and share my entire plan of what I'm trying to do, because I don't want to like make it seem like this is something that somebody else has to do. Make up your own plan for you. But I will share the fact that, because this is part of it that y'all gonna see. The black spiders are gonna see this. So I got a time frame where I'm just gonna be tape reading. And it's crazy. Before I get into what I'm doing, I be telling my wife all the time, I be like, I don't know if it's because both of us are older men, right? Me and ICT, right? We both 50. I think his birthday like a little bit before mine, if I ain't mistaken. But we both 50. But it's like I be so in sync with his thought process. It's like scary sometimes. You know what I'm saying? And so I was thinking about all of this stuff and putting together my plan and putting together, you know what I'm saying, all the stuff that I be doing. I started putting this stuff together like last week. I got like the 31st on my book right here. So that's when I started putting this together. And I was listening to his Twitter space last night. Now I don't know what Carl from Accounting did to ICT, but I was listening to his Twitter space last night. And I was like, man, this is like the thought for this is the wavelength I've been on. You know what I'm saying? So again, since the black spiders, this is something that you're going to see on a daily basis. I got a time frame where I'm just tape reading. I'm just tape reading for a certain amount of time. I'm still going to be on the live. I'm still going to be reading the price, going through the price, but it's going to be a time period where all y'all see is me tape reading. And y'all already know how I tape read when I break it down. If I'm actually getting into a trade, I mark up the chart saying, hey, this is where I'm entering. This is my stop. This is my target. But I'm only going to be tape reading. I'm not going to be taking any day trades, right? And then I got a certain amount of time that I'm going to be doing some other stuff. I got different dates and different timelines that I got set in place for myself. I got it written out. Sort of like if you haven't read the book or listened to the book, The 12-Week Year, I will recommend that you read that. Shout out to homie Zay and the rest of the runners. Whoever, I don't know if it was Zay's idea or one of the runners' idea, but you know what I'm saying, that was a great listen. I'm almost finished listening to it now, but I'm gonna run it back when I get done listening to it, because I listen to it after I work out in the gym. I be working out listening to that Banjo by Il Jodam, and then once his mixtape done, then I turn on the 12-week year and I keep listening to that after I finish working out. Then when I'm riding back to the house, but it's it's a good read. It's all about it's not designed for trading. It's about it's about being more proficient at task. I mean, like not task, but goals, or like it setting stuff in place. 12-week year. Instead of trying to plan out over long times, you plan out 12 weeks out. You treat, you know what I'm saying? Like instead of 12 months, you got 12 weeks, right? So you treating the months like a week, right? And you treating the weeks like like a day. You know what I'm saying? So it's like, you know, the 12-week year. So instead of trying to plan out a whole year, you plan out 12 weeks out. And then once you finish with that, you plan out 12 weeks out once you finish with it. So now, instead of taking a year to do something, you taking a quarter pretty much to do it. You know what I'm saying? And so it helps you just be more efficient. It's all, but anyway, I got everything mapped out, what I want to do. So I just want to announce that, because it's like I'm still gonna be doing the lives, but again, you're not gonna be seeing me take live trades for a while. You know what I'm saying? And second part about my live streams, I encourage everybody that's watching me right now. ICT said he's going to be live streaming twice a week, starting on February 7th. He said he's going to be live streaming twice a week. I don't know what days. I don't know. He's going to be live streaming twice a week. On the days that he live stream, I will only be doing the dinner discussion. I won't be doing no overnight price action. I won't be doing no live stream market watch. I won't be doing, because I'm going to be tuned in to his live stream, taking notes, being a fine student, if you will. And I encourage everybody who watching this right now to tap into his live streams when he do them twice a week. He said he's going to do them twice a week, starting February 7th on his YouTube channel, all the way up until like the end of November. Like I think he said the second week of November. So he's going to be doing twice a week, every week. So on them days, I won't be live streaming in the mornings. I'll just be doing the price action recap, because I'm going to be tapped in. And I think he's going to be starting at 8 o'clock. I think he's going to be starting at 8 o'clock. So when I get back from dropping off the boys, I'm going to pull up, tap into his live stream, and I'm going to be, you know what I'm saying, sitting up here with either the master plan or my digital notes that I be using. I'll be tapped in. So I recommend everybody to do that. Right. Other than that, everything gonna be business as usual. Those are the announcements that I want to make as far as announcements. Now, I had some videos that I want to share with y'all. Because right now we're at like a time where, with the price we've been running so far, right? We're at a time where you don't want to be super bullish for the long term. Right now, the market can go very far on FOMO. It can be, like they say, the market can be irrational longer than you are solvent, meaning it can go against you long. You will run out of money before the market does what you want to do. That's it in a nutshell. So I got one of the videos I want to share with y'all is from my financial advisor. I don't like to just give stuff based off of my feelings, right? I'm either gonna show you with the price action or show you with some data from my financial advisor. My financial advisor, he all about the stats, he all about the data. Now, what I want to share with y'all right now, let me get the video pulled up. This is a video he did last week, right? Now, while y'all watching this, I'm gonna play little clips of it from it, because this is from his live stream that he be doing. I'm gonna play little pieces of it, but while I'm playing that for y'all, that thing still says acting crazy. I hope I'm not glitching. While I be playing this for y'all, I'm gonna be trying to find the other one. Now, the first one I'm gonna be talking about, he's gonna be talking about how, I say this rally has been going a long time. Don't chase it. He gonna give you the stats behind why you shouldn't be chasing right now. And it, like, I like to see stats for people who want to see stats. I don't like to get on here and be like, well, I think we done went too far. I think this. You hear a lot of people saying, I think, right? And that's one thing about Dustin that I love. He give you the stats. It ain't about what he think. He give you the stat. These are the stats, right? You got a 50% chance of this doing this. Do you want to take that bet? You got a 70% chance of doing this. Do you want to take that bet? You got a 25% chance of it doing this. Do you want to take that bet? That's what he do. He give you the stats based off of what's happening right now in the market. So let me pull that up, and then I'm gonna try to find the one where he talk about the recession stats. I think I shared it with you all before, but like, we got a lot of people who don't really because I was one of the people. I didn't understand that when it comes to a recession, the stock market and the economy are separate when it comes to recessions, right? So when it comes to a recession, right, historically, the stock market has already moved on past the bad part. Meaning, historically, the stock market is pretty much 80% through the recession by the time they announce, hey, the country is in a recession. Why is that? Because the recession is a lagging indicator. We get right here, right? Just say we get right here in June, and then they look back and be like, hey, remember back then in November, December, when it was real bad, we were in a recession. You know what I'm saying? That's how recessions are. When they be like, man, that was a recession. So it's like people like me that was uneducated about it. When I hear we in recession, I expect the market to start doing bad right now because I didn't understand that the recession was a lagging indicator. And the video I'm gonna try to find, he done talked about it a couple times, but he talked about one where the market is like pretty much the market be like 80% through the bad stuff by the time they announce the recession, meaning it's only a little bit more to go bad. And then one video he was talking about, there's only been like 2 times in history when they announced the recession that the market went on and made a lower low. Right, there's been times where they announced it and the market pulled back a little bit, but it's only been 2 times out of every recession that they ever announced where the market went and made a new low. Meaning, just say if it's been 10 recessions, right, there's only a 20% chance that we will make a new low if they come out and say, hey, we're in a recession, or hey, that was a recession. You know what I'm saying? But let me get this first video, and then I'll try to see if I can find the other one. The first video pretty easy to get to because he just did this the other day, and it's when he was talking about not wanting to chase this rally right now. And I'm gonna let that play through because he show some good stats. He show it with stats. Let me see here. Stock market higher after no tough talk from Fed. Stock market only focused on Fed. Which one was it? Best January, similar. Let me look at mine. Let me see. I probably should have had this already queued up before. Stock market rally continue. Stock market rally sadly cannot continue like this. That's the one. That's the one. Now let me share this. Yeah.
Empowering traders.
I'll put a one in the chat. Y'all hear that sound?
As a trusted
take their place too. We are open and eager for the business, right? Growing. Philip Morris, Procter & Gamble, Estee participating. So financials didn't lift the market. 34% of the I could go on and on. This one wasn't as bad. But financials, healthcare, CVS, Philip Morris, Procter & Gamble, oil was down. Energy continues to pull back. Stocks. If you go to today, 9 points of the you see it will not and cannot continue will take his place. Or her. Or we don't really care if it's a robot. We'll take their place too.
I think
We are open and eager for the business, right? Growing company. Okay, well, hey, let's talk about this market. I'm sure you saw the title of the video today that sadly, this rally, as you see it, will not and cannot continue. When a market gets too far ahead of itself in too short of a time period, well, the market tends to pull back. You at least see the steam run out of it. So today, I feel like you kind of saw a little bit of that. And that was really because there was only a handful of names that were controlling what happened today. 9 points of the S&P's gains today came from Meta and their good stuff there. We'll talk about that in a little bit. 9 points of the gain came from Microsoft. So there's 18 points in the S&P's performance today that all came from 2 individual stocks. If you go down to Apple, 8 points came from Apple, 7 points came from Amazon, and you very quickly figure out, well, the rally today was pretty much the big mega cap stocks out there. There was officially no love in the energy sector here today. Oil was down. Energy continues to pull back, and that's to be expected with commodity prices staying so cheap. We covered that the other day. No love over there. Consumer staples, really no love over there. Anything Coca-Cola, Pepsi, Philip Morris, Procter & Gamble, Estee Lauder, across the board there was no rally. So there's 2 sectors out of the 11 that refused to participate today. It's interesting. How does the market go higher then? Let's continue. Healthcare, no real love over there. United Healthcare, CVS, Cigna, a couple stocks were managed to give you a little bit of a gain there, but you got Humana down on the day. I think I said Cigna already, CNC, Molina Healthcare. So nothing going on there. That's 3 sectors that didn't rally with the market. And then you got financials. This one wasn't as bad. But financials, if you look around, Visa not participating today, MasterCard barely participating, American Express, well, that had a good run lately, so a little pullback there. JP Morgan not participating, Wells Fargo not participating, Citigroup barely participating, so financials didn't lift the markets today. I could go on and on. Is that good news or bad news? Basic materials. Well, they didn't really participate today. Today, the sector actually was down on the day. Utilities. All right, I think it squeezed out a little gain, right? 1/4 point gain on the day. They basically didn't participate on the day. We covered financials. Industrials. This is the start of one of the sectors that participate. 1, 2, 3, 4, 5 sectors. That's it. And in reality, communication services did all the heavy lifting. That sector was up 6.6% on the day. Did you know that, in fact, 1/3, 34% of the entire S&P actually lost today? So you see, well, rally, oh my gosh, I got to participate in that. Not unless you were participating in like the top 10 names. If you did not participate in those names, you're sitting back going, I don't see the rally. I'm not sure I understand what's going on. It was not a broad market rally type day. This was not broad participation. This was simply a group of stocks that have had a little bit of momentum, continuing their momentum. And so very careful out there. When you see things like that, that's telling you that the stock market, let's go over here just one. Okay, let's come back to the S&P. That's telling you that the stock market is running out of steam. Only money is in the stocks that happen to move the market. The rest of the market says, we're not sure we understand why we're so strong out there, and they did not participate. So sadly, when you see things like that, the market rally temporarily is coming to an end. So just be careful there. I would like to expand on that. Let's take a look here. I talked about this yesterday. Here are, out of the S&P 500, here are the top contributors to the gains year to date. And it's actually more than this. This is actually one-day-old data. Apple has accounted for basically 12,
other stuff,
12 points in the S&P. So 12% of all the gains so far this year, which is, it's only February, have come from Apple. If it were not for Apple, the market would, in fact, not be this high. Amazon, about 9% of all the gains so far this year came from Amazon, 7 from Tesla, 6 from NVIDIA. I don't have to list them all off. All of these stocks here account for about half of the entire year's gains. We talked about this yesterday. So what happens when just a handful of these decide to pull back? Statistically, after Apple has such a strong run, does it continue higher? I'll share that with you here in a second, but you got to be very careful when you see these things. We ran into this in 2018 as well, where it was really only a group of stock. That's where FANG came from. Oh, the FANG stocks. That's because that was all that was moving. Everything else was very quiet. Another way to look at it is we come down here and we say all the other stocks in the S&P account for 50.51% of the year's gains. In fact, if these 10 names did not rally like this, the market would be half as high as it is now. Does that make you feel comfortable? Do you like feeling you're supposed to be diverse? Go out there and diversify your portfolio and stuff. You're diverse, but yet all the actions in those 10 names. So the market is forcing you to become more focused, and that is an extremely dangerous thing, I will tell you. We also color-coded them here so you could see Apple, how much of the 50% it is taking up, how much of Amazon, and so on and so on. You got to be super careful when markets do things like this. It is very, very difficult to try to navigate in the short term there. All right, if we go over to the NASDAQ here, this is the most extended, most overbought index in the short term here. All the big tech was what led the way here today. Use the old stats here. Give me a second. We'll go like this. I want to make sure you can see the whole thing. I used our research site and I said, well, Apple is up just over 20% in 25 days. Well, if we know Apple is moving the market higher and is one of the driving forces moving the market higher, how likely is it to continue its rally? Give me some sort of history to show that this is normal. Apple can do this. So what I did is I went to the research site, I put in Apple gaining more than 20% in 25 days, look back 30 years. So any rolling 25-day period, it's going to take a look and give you the stats there. Here's what I find fascinating. Go like this and just pop this guy right nice and smack in the middle. We can look forward and we can kind of measure the performance over the next week, 1 month, 3 months, 6 months. Now, truthfully, you could make this anything you want, but this is just what I went for this time. Are the odds in your favor for Apple to continue its monster rally over the next week? Kinda, 56.5%. I don't know. Maybe you don't like those odds. Maybe you do. Over the next month, you basically have a coin flip, meaning Apple doesn't do this consistently. It is not a surefire bet. Over the next 3 months, it gets better, and over the next 6 months, it's fine, right? You'll take those odds because the odds of you investing in the market at any given moment and having it go higher is 52%. So if you're getting 65% odds that it will be higher in 3 months, okay, that's fine. Do you buy it today? Do you race in there and buy after hours buy Apple? I don't think so, right? In the short term, what this is showing you right there is that Apple is a bit unpredictable after rallying 20% in 25 days. It's not always going to continue higher, and it's not always going to pull back. Average gain over the 1 month is just 1.64%. In other words, it gained 20%, and then over the entire next month, which really, we've only gone 1 month. So after basically gaining for 1 month, 20%, you get this little tiny gain. Some outliers on both sides, but basically, median gains 1.62%. So, let me go back over here. There we go. So is that something you want to mess with? Now, maybe not, but what does that tell you about the stock market? If Apple can be a little bit choppy inside the next 1 month time period, does that not mean that the market is going to struggle a little too? Yes. Yeah, there's no way around that. Now do that with the other stocks that just had this amazing gain in the last month and look at those as well. You're going to find the same data that in the next 1 month time period, it's very tough to predict whether it's going to go up or down. You have a 54% chance of guessing that it will go up and being correct. So I was trying to, maybe not so clearly, but I was trying to put together that sort of stepping stone. Like, how do we look at the market and say, this is exciting, do I jump in? Well, wait a minute, what's moving the market? Okay, these stocks are moving the market. Will they continue to move the market? Do they give me anything in history to show me that this is normal, right? Think about anything else in life. Some people don't like using the stats, but you go to the bank and you ask for a loan and the bank says, show me anything that can prove to me that you historically 3D prints.
All right. So on that right there, for anybody who didn't get it or don't understand it, he's just pretty much saying using the stats, based off the stats for the companies that move the market, once they've gone this far it's only like you only got a 54%. It's a coin flip if it's gonna go up or down. Right? It's a coin flip that's if it's gonna be slightly positive or negative. So it's like a toss up. And with these market moving companies like Microsoft, Apple, all the ones that's been running, that's been leading this rally, you know what I'm saying, so far, it's a coin flip as if the rally gonna just keep running. And if it keep going up, right, are you willing to put on a lot of risk to chase it, or are you willing to sit on the sideline and say, hey, I see based off the stats, we might be headed for some chop. You know what I'm saying? Do I want to be smart about how I deploy my cash? Do I want to wait? I just want to share that because that's a stats-based way of saying this is what typically happens after these market moving stocks have a run like this. They typically, you got a 54% chance that Apple is going to be slightly over 1% positive a month later, right? 3 months down the line, it's a little bit better. That is going to be positive. 6 months down the line, it's, you know what I'm saying, better than the market being positive. You say you got a 50% chance of the market going up over the long term, and you got a 64% chance that Apple gonna continue. So that's better than the market. But in the short term, expect some chop based off the stats. And the same thing with the other market movers. That's what he was saying. That's what I want to share. The other video that I want to share with y'all, I shared this video before, but this was talking about the recession, because like myself, I did not know that when it comes to the recession, the stock market, let's see which one it is. No, it's not that one. It's that one. When it comes to the recession, the stock market is pretty much done with the bad news. Almost there. Like almost there based off like the stats. And the one that I can't find, I think he might have did it in our private class where he went through and showed every recession, and he showed it was only like 2 times where after they announced the recession that the market continued on and made a lower low. There's only been 2 times in all the recessions that went back that the market went down and made a lower low. That's why I said, hey, if it was 10 recessions, not saying that it was, but if it was 10 recessions, there's only been 2 times. That's why I was like, you got a 20% chance of us making a new low when they announced this recession, because everybody feel like we're in a recession. I feel like we've been in one. I feel, you know what I'm saying, like inflation peaked in July. Inflation been trickling down. So I think the recession was like way back there. You know what I'm saying? So, but the stock market is typically 80%. In some instances, when they announced the recession, the stock market hadn't made an all-time new high. But I can't find that video. I think that might have been a private video he only did for the members, or I just don't know what video he said it in. But this video is the one where he talking some recession stats. It's just not the one that I was thinking about when he was talking about the 2 times it only made a new low after announcing. But this one here is some good information too. I shared this one too, but so if you saw it, shut up and listen again.
All right, here we go. The question we're asking is, if we're in a recession and it's a lagging indicator, we probably know the stock market fell. So how far through the recession do we have to get before the stock market bottoms? Because, you know, if you followed for a while, stock markets bottom during the recession. They don't bottom after. They usually don't bottom before. It happens during a recession. And so a while back, we did a class for clients, like this is the class. And I thought,
can y'all still hear?
This mistake is costing Amazon Prime shoppers. Are you still using Prime? Because
can we like measure what percentage of the recession was done by the time the stock market bottomed, and see if we could put anything there? Is it 10% of the way through and then there's more nastiness, or what is it? So let's take a look here. All right, the first thing I'm going to do is I'm going to let you pick up your glass and drink, because you look at this data and you go, oh boy, that's a lot of data. Let's just go through it. I'll tell you what all this means one by one. So on the left, we have the actual dates of the recession starting in 1945. I didn't include the 2018 one because that was just a couple days. But every recession going back to World War II. Here's the dates, and they go in line, right?
Hit the like button.
Next, we have the date and the week the recession started. Right? So we're looking back to see, like in this case here, the date the recession started was inside of what ultimately had, or was prior to what was the ultimate date. So the date and the week it actually started, and if it was backwards, then what I did is I just put a negative number, and if it was right after, of course, it's a positive number. Next, we have the date that the market actually made a new low, right? And what was the drop? So in 1945, the date, March 26th, market made a low, and from the highs to that low was about a drop of 7%. Okay? Then over here, I say, well, what percentage were we into the recession, right? Right here. What percentage were we through? So this is, notice, the recession started on February 28th, 1945. We come over here. The low in the stock market was March 26th. Right? So we were 11% of the way through the recession when we hit a bottom. Make sense? And then over here, we talk about from the bottom to the end of the recession, what did the stock market do? Right? So, oh, I made a slide for that. So from the end of the from the bottom of the market through the end of the 1945 recession, the stock market had gained 24.3%. The big takeaway here is you don't see any negative numbers, do you? So from during the recession, the stock market bounced, and when the recession was over, we were already up 24%. Okay, so let's go back to the full slide here. In 1948, we had a recession. The stock market bottomed 58% of the way through the recession. Had to wait a little bit longer for that one. And from the low to the end of the recession, we gained 18%. In other words, if you were to say, I don't invest during recessions, in that case, you missed out on 18.4%. In the 1945 case, you missed out on 24.3%. Can we assign some averages to it? We can. So on average, the stock market bounces, or I'm sorry, the bottom of the stock market happens about 50% of the way through a recession. Some better than others, right? And from that bottom to the end, the official end of the recession, 24.2% is your bounce during that time. Now, in some of the cases, right? So like here, so remember, this is from the high all the way to that bottom.
A young lady who was mid-30s, a couple of kids came in. I watched my mother being a single.
The bottom happened 62% of the way through the recession. So this was a nastier recession. And if you lived through it, then you're familiar with that. So this one took a while, but the drop was 51%. So we know from our classes earlier in the week, if you were hanging out with me there, bouncing 22% is nice, but that's not going to move the needle for me. If I fell 51% and maybe I invested somewhere near the top, you know from the class that we just did that, well, if you lose 51%, gaining 20, this is not adding up, right? However many drinks you've had tonight, you know those numbers don't add up. So that's that part of it. But look what's interesting here. The average drop is 24.8%. The average recession bounce is 24.2%. The median drop is 20.6. The median rally happens to be about very close, 24.1. What does that mean? If you look at the fact that you're going to live through, me and you, we're going to go together, we're going to live through many more recessions. Number one, if you know that, right, it's not so bad. You get it in your head. But if we know we're going to live through recessions, we're going to eventually play out somewhere along the averages. Kind of like the stock market or the S&P video we did yesterday, where the average return is about 7%, but we hardly ever see 7%. Well, me and you, we're going to be investing long enough where we're going to see that average play out, hopefully a little better. Take the same thing for the recession. We're going to have some bad ones where it falls more than others, and we're going to have some that are not so scary, but we're going to average 24%. Now go over here from the bottom to the end of the recession, what happened? If you're in the recession and you're playing along and you're grinning and bearing it, so to speak, but if you're in the recession, you're going to have recovered, not all of it, but you're going to have bounced, because we know if you lose 25%, gaining 25, that doesn't make you whole again, right? But you're going to have recovered most of it. And so if you say, I don't like a recession, I don't want to invest in it, okay, that's your choice. But it's essentially like you're walking away from what could be you buying a discount, playing along, getting some deals and stuff in there. So I really, really thought this was a cool thing to show, because this is the first time that I'm aware of that anybody's ever said, what percentage of the way through the recession did we mark a bottom? So it's about 45%. In other words, if you were to say recession, there's the beginning and the end of a recession, you don't even have to wait until it's halfway through until you've bottomed in the market. Again, stock markets bottom in recessions. Not once did we see a negative number here. That would have meant that it didn't bottom during the recession. So you got to play along with that. I get it. I stopped really watching TV. That's why I make so many videos and I'm always working and stuff. I don't watch TV. But I stopped watching because you could really and quickly get the feel that this time is the worst time ever. And why? If you're young enough, the next recession, that will be, oh my God, this is going to be the worst one ever. You notice that? That's kind of frustrating, right? Because how could every one of them be the worst one ever, right? Well, it doesn't make sense. So, it's emotion. You start feeling that. But when you have the data and you say, look, I'm 40 years old, I'm 50 years old, I'm going to live through many, many, many more recessions. If I average that out, then it's really not hurting me that much.
All right, Dustin, get off my screen. So, like I say, I can't find a video where he broke down every single recession, and he had it broke down where recession start, recession bottom, recession announcement. He had all of it on the screen with all the data, and it was only 2 times out of all the recessions where after they announced it, the market made a new bottom. And as you see on that one there, the stock market always bottomed during the recession. Every recession, it bottomed during the recession. So meaning like how inflation peaked. So far, inflation has shown it peaked back in July. July was like, I think the last time, it was either June or July was the last time inflation increased, right? It's been slowly coming down since the summer. Like you hear people saying inflation plateaued in the summer, inflation peaked in the summer, inflation did what it, what I'm saying, back then. So it's been slowly coming down. So everybody, the old way of announcing a recession of 2 negative GDP quarters, that was way back in like the spring or the summer. I think it was like the spring or the summer when it should have been a recession announced. You see what I'm saying? So now that all of that's out the way, right? We made a low in June, started to rally, then we came back and made a low in October, and now we've been rallying since that October low, right? So if they come out and say, look back and say, hey, that was a recession, history shows that the stock market always bottoms during the recession. There's never been a time when the market bottomed after the recession was over, right? And there's only been 2 times where the market made a new low once they made the announcement. Once they made the announcement that, this is a recession. And then as you see, for the most part, the one that took pretty much the longest to bottom was like around, 50 something, 60 something percent. But for the most part, the market on average, out of all the recessions, on average, it was like halfway through the recession when we saw the bottom, right? So one of them was only 11% through when we saw the bottom, meaning the recession started, it bottomed, and then it started going back up and never went back down again. Like it made the bottom 11% through the recession. Every recession this long, it bottomed way over here, right? So I just want to share those videos with you to give some stats behind, like, don't like, you hear a lot of people on TV saying, oh, the economy is so bad, the market ignoring all of these signs. We ain't seen this ain't happened yet, this ain't happened yet, that ain't happened yet. But nobody's giving stats. That's why I want to give something with some stats. Not saying that we can't still go back and test the October lows. We can. And then when we pull up the chart, we're going to look at this stuff. Tim, are you going to break down your swing trades to the 930 group with your thought process? If you see a trade during the live stream, that would... Yes, I will. Any trading that I do is going to be on the 930 live market watch. Any trading that I do, day trading, swing trading, any trading that I do is going to be on the live market watch videos. So yeah, just want to share like data driven information to say, hey, don't be a super bear. Don't bet the farm on us testing those October lows. Will there be good swing trade or day trade opportunities to the downside? Yes, there always is. Will there be good day trade, swing trade opportunities to the upside? Yes, there always is. But as you see, we've been in a buy program since October. And now here lately, the market has been held up by a handful of stocks based off, just off the stats that Dustin shared there. And if you go look for yourself, you can see that it's being held up by a handful of stocks. He showed you how these 10 stocks were holding up half of like, you got 490 stocks over here only doing half of the work. When you, should I say, you got 10 stocks that's doing half of the work for a market that's made up of 502 stocks. So that means 490 stocks are doing the same amount of work as 10 stocks. And out of those 10 stocks, these 3 are doing the bulk of that work. So if these 3 take the day off, guess what the market going to do? Because it's like it's being held up by a handful of stocks. So that's the reason behind, don't get super bullish right now for the long term. Be careful. You know what I'm saying? Stay watchful. These are stats showing you why. When I get on here and say, don't be too bullish, you know what I'm saying? Or if I get on here and say, don't be too bearish, these are the stats behind why I'm saying that. I look at the price action and say that. The price action is telling me that. These are the stats for the people who need stats, for the people who don't believe in price action, for the people who don't believe in looking at charts. These are the stats. Why behind why Lil Timmy Rogers be saying, don't be too bullish right now. Don't be too bearish, thinking, hey, we going into a recession. When they find out it's a recession, we gonna crash. Every time we find out it's a recession, with the exception of twice, I wish I could find that video, we didn't make a new bottom. Yes, there's been a bunch of times where they announce it and we pull back some more, but we never, except for 2 times, we didn't make new bottoms. And we never bottomed after the recession was over. So if they come out and say, this is recession, we still in a recession, right? There's a good chance that we've already bottomed, right? If they come out and say that was a recession, this is the start date, this is the end date, there's a 100% chance that we don't go make a new low right now based off the stats, because we've never made a new low after the recession was over, right? If they come out and say this recession, here's the start date, if we're past 50%, there's pretty much 100% chance that October was the bottom, because the average is 45 to 50% through the recession is when we make the bottom. So if they come out and say, hey, we're in a recession, here's the start date, we're still in it. If we're 50%, you know what I'm saying? If it's been a long time ago since we started, you'd be like, hey, if they say, hey, the recession is over, this was the recession, you can say, hey, you know what I'm saying? These the stats behind all of that right there. What Zay said? Cause ain't nobody using those stats. I know a guy named FX Evolution. He uses a lot of stats. Y'all tell me if y'all see Zay out there in his onesie doing Sativa Saturday. Hey, let's go look at the chart. Let's go look at the chart, and then we've been on here for like almost an hour, so we're gonna skim through it pretty fast today. Let's go look at the chart real quick. Since we if anybody got anything, go ahead and just drop it in the chat. We're gonna go through this relatively quick since we took up a lot of time sharing videos and sharing statistical data. Let's go up to the monthly. Let's look at the monthly. Let's see what we've done so far on the monthly. Okay, on the monthly thus far, we have broke this December high. We came up and we did break it. I call it kissing because we didn't run through it. The September high that we have been watching for a really long time. That September high of 4207, we got up to 4208.50, right? We cleared through that September high on Ninja Trader. That September high was 4208, but on TradingView the high was 4207. So we got up to the high. Looking at what we've done on a monthly basis, right? We took out the January high, we took out the December high. Well, we took out all of these highs right here. All these highs got taken out, but the swing high was the December high. So we took out the swing high of the December high, and we got back to the high that we was watching. So we took out the buy side liquidity above the swing high. Shout out everybody that was on the last weekly chart prep. We said the draw on liquidity was this December high, and it got to it exactly how we had laid it out on the live. Everybody that's in the gold membership or higher, you already know what I'm talking about. We discussed how we thought it was going to get to that liquidity, and it got there. Now that we've taken out that September high, we're going to adjust the box top. We're going to put it at the August high, right? That's just the box top. Does it mean we expect it to go there right now? No, that's just the new box top, because we had the box top down here and we hit it, and now we've made relative equal highs. We still keep this high right here in mind because we did not run the liquidity, right? We didn't run when I say we didn't run, like how on this, like on the December, see on the December high, how we got up above it really high, then went back down like that right there. Boom. That was a stop run. You can tell that was a stop run, right? So we still keeping this in mind because now this is relative equal highs, right? And that's a target. Equal highs, relative equal highs is a target for shout out ICT. He told us some the name that shall not be mentioned. I forgot to turn my birds back on. Hold on, I got to get my birds back together. I forgot we're in the backyard. Let me get my birds. Hold on, y'all. Y'all got me slipping. I'm supposed to have my birds going on. I'm gonna try not to put y'all in the Amazon. Sometimes my birds be getting out of control. They be like mad loud. Try not to put y'all in the Amazon. Y'all let me know if my birds be too loud now. We got the outside sounds. Now, relative equal highs, it's like a draw on liquidity. It's like a magnet for the name that won't be mentioned. As he said, I don't want to ruffle no feathers for people who don't believe that there's an algo. So I'm just going to say the name that won't be mentioned. That's what he was talking about on his Twitter space this weekend. But the box bottom, it's the October low. We still haven't taken that out, so we're keeping the box bottom at the October low. We moved the box top up because we reached our destination. That's the new box top, right? If we slide down and start heading back toward the October low, right? Once we break down below this area here, then we will probably move it back to the February high, right? But for right now, the market still looks bullish, so we're just adjusting the box top up to the next monthly high past the one that we just kissed, right? I still want to see a nice run through these highs, right? I want to see a nice run through these highs, and where I would love to see it get to is at 42.81.25. What, Tim? What's 42.81.25? I'm glad you asked that question, Lil Timmy Rogers, right? 41.82.25 would be consequent encroachment on this month, on that monthly wick right there. For anybody who don't know what consequent encroachment is, that's something that ICT teaches. It's 50% through any imbalance, a wick, a fair value gap, a liquidity void. I mean, a real liquidity void where no price has traded. Who texting me? Oh, hold on. I look dark. Why y'all tell me I look dark, man? I don't want to look light skinned, but I just looked a little dark. I think that's good right there. We're gonna work with it. We're gonna work with that. Yeah. So, yeah. Liquidity void, fair value gap. And so, I would love to see it rip through these highs and see how it reacts off of consequent encroachment of that August wick, right? Consequent encroachment of that August wick. I would love to see that. CE August wick. And what I said that was okay. So consequent encroachment on that August wick. I would love to see us like rip through that and then see how we react off of that there. Now that we have taken out this high on this monthly calendar right here, what I'm watching on this monthly calendar right here is the mean threshold of that candle. And the reason why I'm watching the mean threshold of this candle right here is because we came down. We've been in a big consolidation right here. This has been a big consolidation, right? So we came down, we made the low, we started pushing back up. Once we started pushing back up, right, pretty much came down. Now we're pushing up again. Like it was just one big down. But if you notice, like we came down when I was talking about this being a potential order block in the future, because we hadn't technically broke that high right here on that September calendar. So I was watching this to be maybe a potential order block, but we hadn't broken the high. So technically it wasn't. See how we came down, right? A little bit below the mean threshold. And then over here, we kind of came a little bit below mean threshold again, but the bodies of the candles totally respected the mean threshold of that. Now I'm watching the mean threshold of this December candle right here, right? I'm watching the mean threshold of that. And why am I watching the mean threshold of that? Because we've taken out that high on that candle, right? So technically that can be an order block now, because we have a down close candle Do you need any laundry? Yes, I do need laundry detergent. It's getting low. The laundry detergent getting low. Yes, so you can get some laundry detergent. So right there at 39.84.25, right? All right, so bullish order block, mean threshold, threshold, 39.84.25. Right, so I'm watching that right there to the downside. That's on the monthly. Right. Okay. All right, so and that, when we go down lower, we're gonna see what's down there. Okay, so I'm not gonna mark it out because I don't want like a whole bunch of junk on there, but I'm just marking that so I can see that's the mean threshold of that potential order block because we did take out that December high, right? Let's go down to the weekly. Are they too loud? What makes it a viable market? What makes it a viable market model since October? I want to double check if what from ICT this weekend is correct. What makes, let me read. I'm gonna read that again. Mendez, I think you might have been sipping on the scissor. What makes it a viable market model since October? I want to double check if what ICT this weekend is correct. Okay, we've been in the buy program since October. And what a buy program, you can see it on the monthly. You don't have to go down to it like prices fractal, right? The buy program is when you continue to take out buy side liquidity and the discount PD arrays support price, right? So we came up, we took our buy side liquidity here. When we pulled back down, this discount PD array, this order block supported price, right? So we push up. You know what I'm saying? We took out buy side liquidity right here, came above this high, right? We come back down, this order block right here, this discount PD array below price, supported price. And we went back up. We just took out buy side liquidity right there, right? And now we're looking to see here's a discount PD array. Will we come back down and support price right in that? And if you look and see where I put that mean threshold of that monthly order block is right there at a weekly order block right there. So that's, you know what I'm saying, a likely place for price to maybe bounce right there. If we blast, like I said, I want to see how, if we blast through this liquidity right there that we have been watching, I would like to see how it reacts off of this wick, right? Off of this consequent encroachment of that wick. And that puts us right there where at a weekly volume imbalance, right? We got a weekly volume imbalance that puts us right up there, pretty much at consequent encroachment of this weekly order block right there, right? Consequent encroachment of that weekly order block. Let's just go with the opening of this candle right here, right? It's very close to that same place. So that's all, you know what I'm saying, PD arrays, but that's a buy program. When I say, sometimes I be saying like buy model, and that's not correct, because the market maker buy model would be this movement that we're making right here, like coming from this high, swooping down and coming back up. That's the market maker buy model, where you got, and he got things for that, for like accumulation, distribution, reaccumulation, redistribution. He got phases of the buy models. I don't know those phases, but if you go look up his market maker buy model series and market maker sell model, he can break that down. But I just know how they look. The buy models is the shape of a V or U, and then sell models are the shape of a A or upside down V or upside down U. The sell model, buy model. You know what I'm saying? So, and then when I say buy program, we've been in a buy program since October. Because since October, we've been taking out buy side liquidity, and the discount PD arrays have been supporting price. Right? So we're in the buy program. If I said buy model, I'm sorry, but the buy program has been in effect since October. And that's why I was like, I ain't interested in chasing it for long-term calls, like far out. I ain't interested in chasing it because of the price action. And then the video I played from Dustin was giving the stats behind why I'm not interested in trying to chase, because if the big boys typically are 50-50 that they can go up or down, you can expect chop. And if you expect chop with the market movers, then you can expect chop in the market. Those are the stats behind it. Now, hopefully I answered your question there, Mendez. Okay, weekly. On the weekly, we have this weekly order block right here below price. That's right at the low of the week, so I'm going to mark it out. Is right at the low of the week, and when I say the low of the week, our weekly low, weekly bullish order block. All right, we got a weekly bullish order block here. Our weekly low. Weekly box bottom. I don't like how that's overlapping right there, so I'm going to pull that out a little farther. And put this over on the edge, because I don't like how that's overlapping right there. Y'all give me a second. Put that to the right. Okay. Weekly box top. All right, so we got we got a weekly volume. No, it ain't a volume. It's got a counter. ICT been calling them volume imbalances. He been messing me up, so I'm just gonna go with what I know. Right here, we got a weekly bullish mitigation block right here. I'm not gonna bother marking it out, but we just gonna keep that in mind that we got a weekly yeah, we didn't break the low, so we got a weekly bullish mitigation block right here for anybody who want to see it. I'm not gonna mark it out, but that right there will be a weekly bullish mitigation block, because we came up and we made a high, then we came back down and didn't break that low, then we traded back up through the high. So this last up close candle right there, that would be a bullish mitigation block right there. The mean threshold of that bullish mitigation block is, let's just say, let me do the fibs. 40, 57, 75 is the mean threshold of that bullish mitigation block right there. I'm not gonna mark it though. All right, so we got the weekly high, weekly low, bullish order block on the bottom. Let's go down to the daily. Going down to the daily. Daily charts. Okay, so with the daily, pull this out. That's our consequent encroachment on that wick. Okay, so looking at the daily, again, we just took out the buy side liquidity high of the December high. We kissed the wick of the the September high, which also put us up here into this order block, this bearish order block that we got up into. We didn't get up to mean threshold, but we did get up to the order block. We got up to the high, and then we reacted off of it, right? So we've made relative equal highs, right? So below price on the daily, we have an order block right there at the daily low. Let's mark out this not order block, I'm sorry, fair value gap. We got a bullish fair value gap right at the daily low. Right, so we got a daily fair value, bullish daily fair value gap, right? Let's mark our daily low and daily high. Our daily low, daily box bottom, all right, is 41.3250, right? Our daily high is 41.94. Daily box top. Right. And then we have an order block resting right below that that daily fair value gap that I'm not going to mark out. Looking at this right here, just a quick view. That's all I'm going to mark out on the daily. So a quick view of how we've traded thus far. With this weekly order block down here, sitting right next with a daily order block sitting right on top of it, and a daily fair value gap sitting right on top of that, right here at the we have a daily breaker that's over here, right? We actually got two break. This is a breaker and this is a breaker, right? We got two daily breakers right here within a weekly mitigation block. It's all in the same area right here, right? So this daily breaker, all of that is in line with a weekly bullish mitigation block. So we got a lot of resistance to get through to really look bearish in like the longer time frame, longer than a day or two. You know what I'm saying? So looking at where the market is trying to look like it wants to draw on liquidity, which is getting above these equal highs that we came up and made. We got above this high, made equal highs, maybe even this high, this fair value gap, consequent encroachment on that wick, and maybe even the August highs. That's the path of least resistance right now, right? But in the meantime, getting there, healthy price action for Lil Timmy Rogers would be to come back down and fill in this fair value gap, hit this fair value gap, and then take off. You know what I'm saying? Even hit the fair value gap and then stop at this daily order block right here. I'm not marking this order block for anybody who needs to see it or wants to see it. This down close candle right here on January 30th, that's the daily bullish order block right there. Right? That's the daily bullish order block right there. Right? Price, we went up, got the reaction. Right, y'all know how I like when price gets to my PD arrays, when we go up and get that reaction. You see the reaction we got that day, so you get the reaction the next day, you go up into a premium to sell off of, right? So it gave you the reaction. Next day you go up into a premium to sell off of, and now you're waiting for it to come back where? To this fair value gap. This right here should be your target or your shave point, right? If you bought in Friday, this fair value gap would be your target or your shave point, right? Looking to see if you get down to this order block, right? Boom, and then bounce up, take out the equal highs, right? The relative equal highs over here. Boom, take out equal highs, maybe even take out the August 26th high, and then hit consequent encroachment on that wick where I said I want to see how it reacts there. If we get there, it'd be nice to see a little reaction off of that and then attack the August highs. Right? Do we have enough juice to get back to the August highs? I do not know. Because again, remember, I am watching, for those who don't know, I am watching if we get our quarterly shift, because back in October, we got the quarterly shift for the NQ and the YM we got the bullish quarterly shift back in October, and then the markets went up. For those who don't know what I'm talking about, back in October, these are daily candles on all of them, right? Back in October, after taking out the June lows, we came down. Give me a line. We came down and we took out the June lows right here in October, right? We took out the June lows there. We took out the June lows here on the NASDAQ, and then we took out the June lows right there on the Dow, right? Once we took out the June lows on all three, we got the bullish divergence. The ES made a lower low, started making lower lows, these daily candles. The NASDAQ started making lower lows, right? And then the Dow started making higher lows, slightly higher, but higher nonetheless, right? The Dow started making higher lows after we got the bullish divergence on the Dow, right? The Dow exploded, and the Dow came all the way up and took out the August high, right? The Dow came all the way up and took out the August high, right? And it took the August high out back in November, right? The Dow took out the August high in November, right? The NQ and the ES, the NQ was the lagger. The NQ lagged. They just kind of consolidated, right? The ES was the red-headed stepchild in the middle, right? When we got to November, right? November and December, we came close to the September high on the ES, but not quite, and the Dow was lagging. Now, looking at now, I'm watching the fact that since the middle of January, right, we're getting bearish divergence on the Dow. All right, since the middle of January, we're getting bearish divergence on the Dow. And this is what okay, January, right here, January 16th, 17th. So from January 17th, right, the ES is making higher highs. The NQ is making higher highs, but the Dow is making lower highs, right? We got the bearish divergence on the Dow, right? And I'm watching to see if this is our quarterly shift. Well, Tim, why are you watching to see if it's our quarterly shift? I'm glad you asked that question, Lil Timmy Rogers, because back in October, we had the bullish quarterly shift. October, November, December, January, February. That's 3 to 4 months later. ICT teaches every 3 to 4 months, we have a quarterly shift. And you recognize the quarterly shift when one of the three indexes, NASDAQ, S&P, and Dow, they typically move together. They move in what they call not unison, not symmetry. What's the word I'm looking for, y'all? They're correlated. They are correlated, meaning when all three go up together, all three go down together. They're not tick for tick, but when the NQ is making higher highs, the ES should be making higher highs, the Dow should be making higher highs. When they start to diverge, right, we see a quarterly shift in the divergence. We saw it back in October. We saw a bullish divergence on the Dow, and then we started to go up, right? Does it mean that the Dow is going to be the weakest? Doesn't have to be. Typically, whichever one shows the divergence is the one that moves the fastest, because when they're adding money to that one, it starts to show the bullish divergence. When they're moving money out of that one, it starts to show the bearish divergence. So I'm watching this bearish divergence, and this is why Lil Timmy Rogers is not interested in trying to make long-term swings. I look at the price action to say, hey, I ain't trying to chase this rally because we've come so far and I'm seeing the bearish divergence. My financial advisor gave it to me like, hey, Tim, he didn't just say Tim, but hey, Tim, You might not want to chase this rally because right now the market is only being held up by a couple stocks. And based off the stats, when these stocks do this amount over the next month, there's a 50-50 chance that it'll go up or down. So expect chop out of these stocks, and these the stocks that are moving the market now. So if these stocks chop, the market will chop. He gave me the stats. I looked at the price action. That's why I stand where I stand. And hopefully this was helpful. Let me look at the chat and then we're going to get out of here because we've been on here way too long. Way too long. The bird sound like a squeaky wheel. Saw that. Do you typically use the weekly or monthly chart for swing trading? I use the weekly and monthly chart for everything. I do top-down analysis for my day trading. I do a top-down. I start from the monthly, go to the weekly, go to the daily to formulate like my bias of what I think the market going to do over the next week. And then once I get down to the daily, I start looking at how is the market going to do this? Where is it going to attack liquidity on the lower time frames? What is it looking for to move to this swing high and this swing low? If I'm looking for it to hit a weekly swing high, I'm looking for it to hit a monthly swing high. What is it going to attack on the weekly to get there? What is it going to attack on the daily to get to that weekly? What is it going to attack on the hourly to get to that daily? What is it going to attack on the 15-minute to get to that hourly? I start from the top down for everything. Can I come up to the live? He has another way that I saw on a video 2016. Sure. There's the link right there. Pull up, share with us, break us off. So a weekly bullish mitigation block plus a daily bullish breaker, consequent encroachment of the monthly. That's going to be the mean threshold of the monthly order block. Consequent encroachment is for gaps, but mean threshold of the what's up, Mendez? And all in the yes, they all in the same place. A lot of stuff in the middle of the road. What's up with you? You gonna share your screen?
How you doing?
I'm good. I'm
Can
good.
you hear me?
Yeah, I hear you. I'm good. You gonna share your screen?
If I remember how to use it.
Yeah, you were saying that you want to share a different way he was talking about doing it.
Yeah, that I saw from a video from like 2017. I think it was.
Do you need the chart? Or can you just talk
No,
about it?
No, you can do it yourself. I tell you what. It's simple.
Oh, okay. So just put my chart back up.
Yeah.
Okay.
You could go to SPY if you want.
SPY? Just SPY by itself?
Yeah. Or ES is the same thing, I think. Yeah. And add the 10 and the 10 EMA and the 20 EMA.
You say SPY, then add the 10 and the 20?
Yeah, on the daily.
Daily, okay. And then let me go over here and indicators. You say the EMA?
Yeah, 10 and 20.
So let me see here. All right, don't let me change it. I hate when they don't. Hold on. I got to find one that's going to let me change it. Like some of them let you change the
Just put EMA twice.
Yeah, like some, but that one wouldn't let me change it. It wouldn't let me change the numbers.
Oh.
It was stuck on like 2050 and it was like 2050 100. It didn't let me change. I don't think it did. Am I tripping? Let me look and see. Let me see something. Oh no, I don't know what that is. Get out of there. See, because when I put it on there, and then when I go in there to settings, outputs, see, it don't let me change the it don't let me change the range. It's just, yeah, let me find Okay, 10 EMA. I don't know what this is.
Just type in 10-20 EMA.
10-20 EMA.
Yeah.
Okay. 10-20. 2010. I mean 10, 20, 50. Okay.
Go down, keep going down. I think it's more down.
I was gonna try to see if it let me hide some of the other ones.
Oh yeah, you could do that too.
Yeah, I'm gonna just see if
I know they have it like
10. I don't know, 20 and 100, 550. 20. Let me see if it let me hide it on this one, and then I'll look again. Okay, so the 10 is okay. So the 10 yellow, red. So it's 10, 20. So red and yellow.
okay.
All right, so 10, 20, red and yellow. Okay, so red and yellow. Come here. So red and yellow. So hide these right here. All right, so that's the 10 to 20. Because it's in order, right? So the colors be like, so the 10, 20, so all right. So that's the 10 and 20 right there.
And you go to when the 10 crosses the 20 on October.
You said when the 10 touched the 20?
When it crosses it. It crosses
when
it
it crossed it in October?
Down here. Yeah, down, yeah.
So right here. When when the red crossed the yellow, yeah.
That makes it a biomarker model.
It
goes down a little bit, yeah. So if you highlight the whole thing from when it crossed all the way to the top, highlight it, like put it in a box.
Yeah. Talk about from here.
Yeah, all the way to the top to now, to the present.
All over here.
Yeah.
Okay.
That's every time you get a pullback is a bio pullback.
Okay. Based off the 10 EMA going above the 20 there.
Yeah. If you put it like in an hourly chart, you just wait for the 10 to cross the 20 and doing the PDRAs, all of that, you can find entries there.
Okay. So blend the PD arrays with the moving average.
With this. No, well, as long as the 20 is above, as long as the 10 is above the 20, you could buy every pullback.
Oh, they buyable pullbacks. Okay.
Yeah,
I'm following what you're saying.
But you need you need the 10 above the 20.
Okay. I get what you're saying.
Yeah.
Like it's like the pull, like when you hear people say, okay, this is a buyable pullback, you know what I'm saying? Based off this
that's consolidation right there. That time, that's whatever December this, when he got out of there, you can buy it.
Yeah, from December. Yeah, from the middle of December up until early January, and then it went up. So, all right, once you pop out, buy there. You know what I'm saying? Come back down, buy there. Yeah, okay, I see what you're saying.
Yeah. That's his swing trade secret. The video that he has on his channel.
Oh yeah?
Yeah.
That's what's up, man. That was I appreciate you dropping that gem for the people. Yeah, man. Yeah, man. How them girls doing, man?
They doing good right now. They're on the iPad right now. It's iPad time for them.
Oh man, I already know my boys back there on the iPads. Select move. Okay, they out there. Y'all out there with all the help now that I'm looking like when I was looking at the chat, y'all wasn't telling me nothing. But yo, I appreciate you putting up and sharing that, man.
problem.
Yeah, man.
Thank you for having me on.
Y'all. We've been on here for an hour and a half. I'm gonna go ahead and call it, man. Hopefully I was able to share something. Hopefully y'all got something from what Mendez pulled up and shared. The gym with the 10 EMA and the 20 EMA. When it crossed above, being valuable pullbacks, and then you utilize your PD arrays when you want to make your entries. That's what I gleaned from it anyway.
Yeah.
Hopefully y'all was able to glean something from it, man. But
it is the same thing back. Like if it crossed down the daily,
yeah,
then you look for setup for the downside.
Yeah, selling the pop, sell the pop, buy the dip, sell the pop.
Correct. So
yes, sir. All right, man. So
man,
on
ICT all weekend.
ICT say he going live Tuesday. So tomorrow gonna be a regular day. It's gonna be a regular day. I'm streaming everything. Then Tuesday, I'm only streaming at 6:30 p.m. because he said he going live at 8. So it's gonna be the first day when I ain't gonna do no morning streams. So I'll see y'all in the morning at 9 for the overnight price action. To then, man. Y'all enjoy the rest of y'all weekend. Enjoy y'all family, man. I'm gone.